Good morning and thanks for your company. Well, the Aussie share market lifted 6% at the open as the futures expected, following the ASX 200's 4% rise yesterday. All of our sectors are in the black. IT stocks, consumer discretionary, miners, all leading the charge, while staples are up the least, 2%. But remembering the staples sector has been the shining light for the ASX 200 sectors year to date. All this positive sentiment comes as global equities rallied overnight, with the US citizens and traders both rejoicing as the world's largest economy is closer to getting that $2 trillion stimulus package, with lawmakers negotiating the spending bill that will support the American economy through coronavirus. The S&P 500 rebounded from its lowest level since 2016, ending higher for the third straight day, its best turnaround since October 2008, up 9.4%, while the blue chip index there, the Dow Jones, ended 11% higher, rising 2,112 points. That was its biggest gain since 1933. Over in Europe, another positive story, the Stoxx 600 ending over 8% higher, helped by two things. One, the US Federal Reserve kicking off that open-ended asset buying program, injecting money into the largest economy in the world. And secondly, and importantly, Italian coronavirus cases have slowed for the second straight day. What to watch locally? Well, today I'd be thinking about the businesses that will be temporarily impacted by the new measures introduced by midnight tonight by the Australian Prime Minister Scott Morrison, calling on amusement parks, community centres, gyms, fitness centres, swimming pools, galleries, museums and in-store beauty therapy businesses to close. Shopping centres will remain open, but food courts will only be able to sell takeaway food. Weddings will be allowed to continue, restricted to a maximum of 5 people, including the bride and groom, while funerals are limited to 10 people. The Prime Minister also banned real estate auctions and open homes inspections from this evening, meaning those real estate agents that have got good technology and internet auction facilities in place will shine through. Also considering the fact that our employment has taken a significant hit on the back of coronavirus, while much of China's workforce is going back to normal. But so I'd be considering what that means for our Aussie property market. In terms of company news, we've heard from a lot of companies at the open. Property group Charter Hall gained 12% at the open after reiterating their earnings is on track for 2020, and their earnings will be about 40% higher compared to last year. InvoCare, the funeral operator, opened 9% lower after saying their business has felt the impact of social distancing, while they've also implemented a hiring freeze. Wesfarmers gained 8% at the open, saying Australian operations will continue as normal while it's having to close its NZ Kmart stores. Bunnings will remain open to trade customers, not the public. Meantime, Southern Cross Media SXL entered a voluntary trading halt after their shares have lost about 80% since 20th of Feb. And Cochlear announced that it will retain its workforce. Great news, while it will undertake a capital raising to boost liquidity in the order of $1.7 billion. It also advised it's got no debt maturing till next year, so a bit of relief as well for them. What else to think about? Well, gold is trading at $1,673, lifting 5% overnight, making its biggest 4-day rally since the GFC, on the back of Congress progressing that stimulus package. So I'd be watching out for Gold Road Resources, GOR, which gained about 17% yesterday. Also watching St Barbara SBM, which lifted 11% yesterday. And I'd also be looking at the gold ETFs like GOLD, which is up in the order of 26% year to date. And lastly, the Australian dollar has bounced off that 17-year low, and it's now buying 59.81 US cents. Take care and stay safe.